With the exception of Singapore, office rents in Southeast Asia rose at a very tepid pace. Jakarta, for example, emerged the top market, expanding at under 2%, while in Kuala Lumpur, rents rose marginally due to two newly completed buildings. Singapore office rents, on the other hand, dipped 5% on a net effective local currency basis after two consecutive quarters of very low growth. Landlords of newer buildings are taking preemptive steps to retain occupancy ahead of the anticipated new supply in 2016. Capital values largely kept pace with rents except in Manila and Kuala Lumpur, which saw slight yield compression due to the weight of capital in these markets. In Singapore, capital values remain stable. On to retail. Retail rents have likewise slowed to less than 2% in Jakarta, Bangkok and Manila after strong gains last quarter. International and regional retailers such as H&M, Uniqlo and Zara continue to drive the demand of retail space in these markets. Retail rent in Kuala Lumpur dipped almost 1% due to falling Chinese tourist numbers and a weaker business confidence after consumption tax took effect this quarter. Likewise, in Singapore, weaker tourism arrivals and tight labour conditions continued to beat down retail rents. So even as investment interest in retail remains strong, the lack of motivation by domestic sellers is keeping a lid on transactions. Overall, the strength of capital values in most Southeast Asian cities is slowly easing, resulting in slight yield expansion. Is this an early indication of anxiety over the eventual US interest rate hike? Perhaps. As for the office market, stable economic growth across Southeast Asia has resulted in a broad-based domestic demand for office spaces. In Manila's office market, demand from foreign as well as local professional services firms have continued to lend support. What is most interesting is the emergence of more foreign firms setting up their own backroom operations in Manila, instead of outsourcing these functions to third-party firms. The need to control the reliability and quality of the output is increasingly more important to these firms. We should expect these trends to pick up in the short term. Singapore's office market continues to be driven by renewals across all business sectors. Existing landlords of newer buildings have taken a proactive stance to shore up occupancy by giving more discounts. We are likely to see a similar trend going forward. Growing affluence and a rising middle income group continue to support the retail market. New-to-market retailers, especially fast fashion and F&B, will continue to make their direct foray into emerging Southeast Asia in the near future.